So the Federal Reserve has cut interest rates by 0.5%. And now the Fed funds rate at 4.75 to 5%. And it is the first time they cut interest rates in a couple of years here. And we were at the 5.25 to 5.5% since July 2023. And now that the Fed funds rates, I wouldn't say unexpectedly, I did expect the Fed to cut interest rates by 50 basis points. Now, what does this mean for everybody else? So let's take a look at what the CME group, I do want to show you this real quick. So the CME is predicting that the next Federal Reserve meeting on November 7th, which is 2 days after the election day, to cut interest rates by another 25 basis points. So there's a 60% probability. And again, these numbers do change almost every day, every hour. So, you can view it like, all right, this is probably what's going to happen. But they are projecting another 25 basis point rate cut on November 7th, down to 4.5 to 4.75%. And then for the December 18th Federal Reserve meeting, they are looking at, and the website is extremely slow right now because everybody's on it. But when I was looking at it, there is a 34% chance of cutting another 25 basis point and a 48% chance of cutting the rates to 4 to 4.25%. And this is something that we could see continuously going into 2025 and continue to cut interest rates by either 25 basis points or 50 basis points. And so, this is going to be very interesting because maybe this is all going to depend on the labor data and inflation. So here are some things that you want to be aware of. So today, this is done, Fed announcement, they cut the rates by 50 basis points today. So the next data that we're going to get is September 26th for the final estimate for the Q2 GDP. And then we're going to get the advanced estimate on October 30th, which is over a month from today. But we're going to be looking at the Q3 GDP and see how that turned out. If it's weaker than expected or if it's still strong, like what Jerome Powell has said during the press conference. And this is a very important data as well. PCE inflation on September 27th and October 31st. Is the 50 basis point rate cut going to flare up inflation again? Or are people spending more money? To me, I don't think so, because this is more going to delay the rate cuts and people shopping. It doesn't mean that people are going to start taking out debt all of a sudden, right? People are still kind of holding fast and say, you know what, I'm going to hold off a little bit and see how many more rate cuts they're going to do by the end of 2024. And then I'm going to reassess and see if I'm going to buy a house, or if I'm going to take out a loan, or if I'm going to buy a car or something like that, right? We're going to have CPI on October 10th, and we're going to have PPI on October 11th. And this is the most important data that he was talking about, is the unemployment on October 4th and November 1st. So write these down on your calendar. And then JOLTS, that's another one, October 1st and 29th. So write those down and on your calendar or whatever, and take a look at, then we'll get the jobs data for those 2 months before the next Federal Reserve meeting on November 7th. And they were talking about the dot plots a lot. And what I want to show you here is that I know I have some notes over here, but 4.4% was what was brought up during the press conference a lot, right? So right now we're at 4.2%. Now the Federal Reserve, they're predicting that the unemployment rate to be at 4.4% by the end of the year. But if we get 2 more labor data and say, you know what, now that the unemployment rate is already at 4.4 or maybe 4.5% by November, then the Fed could easily cut another 50 basis points, okay? Because they're showing that, wow, this is more of a rising at a rapid pace. Now, what if by December we get, let's say 4.6 to maybe 4.7, then they could cut another 25 to 50 basis points. Then they could even be more aggressive with the rate cuts. We'll see about that. And that's what they were talking about. And this, I know it says 4.4 to 4.6, but this could change. It just really depends on the data. And Jerome Powell even said it is very data dependent. So they're going to take one meeting at a time and then reassess and see how that data looks. If unemployment rate came in a lot higher than expected, then they're going to cut rates probably even more. So 50 basis points. And this is going to be very, very interesting to see how everything is going to transpire, because the market right now is reacting pretty flat. Nothing, it's not going up, it's not going down. It was down for a little bit for the S&P 500 and the NASDAQ, and now it's at green about 0.2% and then 0.5% for the NASDAQ, and Dow is up 0.25% or 104 points. So not much changes, which is understandable, because when I look at the 50 basis point rate cut, right? To me, I'm like, well, this is kind of expected. I think they should have cut in July. And I said that in the last live stream, that they should have cut in July or maybe even June, but they delayed that. And Jerome Powell even said that at the press conference. They wanted to be patient and see how it went. Now the unemployment rate is rising, not rapidly, but steadily, right? Going from 3.9%, 4%, 4.3%, now down to 4.2%. That is concerning. I get that low 4% is still considered healthy, but it's the rate of change that is concerning. When you go from 3.9% up to 4.3%, that is concerning, right? And I talked about the holiday season hiring is going to be a lot weaker than expected from the year prior. Target, Walmart, Costco, they're not going to hire as many people in October, November, and December for the holiday seasons. Those are the things that we want to pay attention to. Those are the things that the Federal Reserve is paying attention to, so that it doesn't become 4.2% to 4.5%, 4.6%, and possibly end the year with 4.7% unemployment rate. Now that would be troubling. No matter who gets elected to the White House, it's still going to be something that the Federal Reserve will have to deal with going into 2025. Now, recession is a concern, and that's something that they brought up and say maybe a recession is going to happen or maybe not. Jerome Powell said, I don't see anything that's indicating a recession right now. A lot of people might disagree with that statement. I'm with them, right? Unemployment is a concern. Inflation has come down, but people's savings rate are still horrendous. People are still spending more money on groceries than they did 2 years ago, 3 years ago. I know the inflation has come down to 2.5% for CPI, but some items on the grocery items, we're still paying over 30%, 40% from 2 years ago. So that's something that's frustrating the American people, that they are paying way more money than they used to. We're going to see how it goes. And I know we have several catalysts coming up with the election coming up on November 5th. And that's 2 days before the next Federal Reserve meeting. Whoever gets elected, that's something that they asked them. How do you feel about the Federal Reserve being an independent agency, or, how will you be influenced by the elections and all that? And Jerome Powell said, no, we're going to maintain that independence, and we're going to make our own monetary policy, and Congress is in charge of fiscal policy. So, but anyway, I thought the press conference is okay. It's nothing, something else I think we all kind of have to remember is that I'm sure that he prepped those words. There are words that he can't say. He was very careful with what the phrases, and he didn't want to, panic anybody, because when you heard 50 basis point rate cut, right? People are like, well, that's kind of weird. Why are we doing 50 basis point? Is there something that you're not telling us? And so in a way, he kind of reassured reporters, journalists at the press conference that no, there's nothing indicating that there's a recession coming. The 50 basis point rate cut is something that we voted on, and then here we are. So we'll see how it goes.